Good morning, good morning, good morning. We write Friday, the 30th of August, 2024, last trading day of the month before a long weekend in the US and Canada for their Labor Day. So we are going to have a look together at what's moving and shaking today. First of all, a reminder of our coaching program where you can get coaching sessions with each of us here at your choice. Also, when you take a coaching session with one of us, you can see that you have from your first hour 40% off, and then you get an extra discount if you take several hours at the same time. So take advantage of it. We are still ready to help everybody out. Our coaching program is pretty successful, but we are ready to help more people, and people who come to our coaching sessions are all very happy about it. Also, we still have our trader funding program running, and as we already said, you can have different accounts, of course, but for each account, and I'm not sure whether it's for every account, but I know that from a certain size at least, you will have also a free introductory session with Blake Morrow. Once you subscribe to the trader funding program, you will also have access for the time of your assessment to our trading room, which is a great venue. People in our chat room, trading room, did I say chat room? They know that it's one of the most active communities in the world. Everybody is there to help each other, so no time to waste. Just join our program. Here we go. Let's move on to what's been happening yesterday afternoon and into our morning. We don't have to come back on those CPI data from Germany. We did have the European ones in the meantime, but let's have a little bit of an overview of what's been happening on the headlines front. We did hear yesterday from Jordan in the S&P. I'm not going to say that they intervened there, but he did say that the main goal is still, of course, price stability for them. Things are moving the right way, but we have seen Swiss tick up quite a bit. He did before that. He did remind us that monetary policy remains their main instrument, but that they will or can and will also intervene in FX if they deem necessary. And as a matter of fact, since he spoke yesterday, the Swiss has been ticking just that little bit lower. We're still trading month end. There is potential. I don't know whether most is done or there's still some to be done, but we have seen the Swiss again strengthen a bit over the course of month end, especially on the crosser side now that the dollar has stabilized a bit. But we could, if that comes back or if there is some leftovers to be done, we could be printing a bit of a high in the Swiss franc this afternoon. It could get a bit interesting. Just looking at what you guys are already saying on the chat. Yeah, hi Angela, hi everybody, Darij and Michael and everybody. So what else? Moving over to that Xi Biden meeting. So Sullivan was there preparing the meeting. China did make it clear, though, there seems to be some various areas where they can work together. We also know that there have already been technical working groups in place, but Xi just made it very clear again, or at least his spokesman made it very clear again that Taiwan would be a red line. So we can turn it how we want. It is a positive, obviously, that they talk. There is some common ground to be found on many areas, but I do think that Taiwan is still going to remain a very sticky point, and which may hamper progress that could be made in various other areas. So the date has not yet been fixed, but they are firmly planning on holding that meeting. Staying in China. By the way, the PBOC fixed the dollar yuan finally lower now into the 711, 711.24. They have also continued to add a bit of liquidity. They have been buying a few bonds as well over the month of August, as the latest numbers have been showing. They bought about 100 billion yuan worth of government bonds from the dealers in August. That's the latest numbers. But then there's been a bit of a headline that likely underpinned the Chinese yuan a bit overnight as well, saying that China is now considering allowing homeowners to refinance home loans for up to $5.3 trillion equivalent. And that, of course, is to revamp, or to try at least to revamp, the homeowners consumption, and to also try to get them out of that real estate slump that they have been in for months on end now. So yeah, China is really trying to throw the kitchen sink at it now to try and help the real estate market to get back head above water. It is still domestic affairs. We have been talking about that quite a lot, and still, I think for the China to really get back to where they want to be, they will be having to take care about their international relationships as well to relaunch exports and stuff. Although we have seen that where the US is trying to limit them in what they can do, the European Union is a bit less. Yeah, they have put tariffs on some stuff, but then on the other hand, Germany and other countries are still discussing with China where they could actually work closer together. So it's a bit of a different approach from one side to the other of the pond. Moving over to geopolitics for a minute. Israel said that they have eliminated one of the Hamas leaders again. Local Hamas commander in the West Bank city of Jenin has been eliminated, they said. But at the same time, a few hours ago, they said that their war is not over yet, and they even wanting to extend it to more to the north. So I think that the geopolitical risk is at least kept alive over the weekend. We know that other countries are still thinking about retaliation. So whatever the negotiations may be, and some form of standstill may come forth, as we've seen yesterday. It's still a very fluid situation. I would still not call it over. So on that side, and then I'm specifically thinking about oil and metals, gold, for instance. We're still having to be very careful with what's going on the geopolitical front. And then let's get over to what happened in just the headlines for now. I will come to the data a bit later, but the headlines for now. And we're starting to hear from the Japanese budget that should be decided upon towards the end of this year. But we've started to hear this week about the defense minister trying to up the budget again. And Suzuki was out overnight saying that the wage gain and the defense is topping their priorities. So that budget is expected to come in now at a record number, which is for the first time, I think, in history, above $800 billion worth. And we have to think about that in the framework of the Bank of Japan as well, raising rates, and the government will having to fund this all this money. So I think there's going to be a bit of hints at the Bank of Japan, and we already heard the last time that Ueda was speaking in Parliament about where Suzuki was coming on saying that things would have to go smoothly. So I reckon that towards the end of the year, the government is going to put a little bit of pressure on the Bank of Japan for Ueda not to go too fast in the normalization. Okay, but we will see those Japanese and the Tokyo CPI numbers coming that came out overnight. That was not really helping Suzuki's case at all. What else? Okay, let's move over to oh no, the last thing that I wanted to mention in the race for the US presidency is Harris. Um, she spoke after the Democratic convention. She spoke to the press, and she was saying that she vows a tougher approach on migration and supports weapons for Israel. And so, where she was really during the Democratic convention trying to go all on the positive side and of things. Now she is starting to show a little bit on what may not be as popular or what may not be as all rosy and dandy. So in the meantime, we see the polls and we see also that she is actually pulling alongside and in some states even ahead of Trump. So there is we are starting to see or we are seeing these polls evolve, and it's tough for a little bit later, but I do think, and I've also read a few articles and banknotes and things. The market is starting to think about it really, really closely now. We of course had already, as we said, these Trump version 2.0 trades starting to come up, but or to show and then having to be unwound but the banks are starting at least to prepare now to really try to see what is tradable going into the US election. So expect polls showing political moves here and there. Expect the closer that we get to that US election, expect them to start to again have some influence on what the markets may do. And I'm thinking about bond markets. I'm thinking about perhaps certain emerging currencies also, thinking about the mix, for instance. All right. And then moving over to the ECB, because we had between yesterday and today, we had most of the ECB bots out talking in various venues. And first of all, and as James already mentioned as well in our chat room, we had the hawks starting to tame a bit the expectations for two big cuts on the ECB, saying that Nagel was saying that he's still wary of cutting too quickly and that the core inflation goal is not reached. Schnabel said something similar, saying that they will adjust the monetary policy based on facts and expect the goal on inflation to be reached still at the end of 2025. I mean, the Germans must have had PC issues, perhaps, and not seeing those German CPI numbers that we saw coming out yesterday. But at least they are sticking to the slow approach, right? On the other hand, we did hear from ECB Rain as well, and that's he used to be an Uber hawk, right? And he's now coming back to the other side of the medal, and he says that to him the growth outlook is not good, and it reinforces his view that a September cut is on the table. Kazakhs said a bit both. He said still slow and that the service inflation is still sticky, but then he is also open to at least a discussion on ECB rate cuts in September. So that's a bit both sides of the coin. Officials were talking about those rate cuts. looking at the data that we have, and we can look at those data now, I think. Let me see if I've got anything else left on my little sheet here. No, I think we can move over to the data. So going over to the data, we've seen those German numbers. US yesterday surprised a bit to the upside, right? We did have a little bit of a beat coming in on the dollar, which in the meantime is being selectively undone. But those numbers were showing pretty decent numbers. It is the first revision, okay? We will have more on this GDP. But where we did this was relatively okay was on the sales side of things, and on where is it? Okay, prices came up, but the spending was pretty good, all right? And we know that the consumer is still quite important for the Fed as well. So, but again, Q2 numbers, don't hang your hat to it, but the market will still trade some of it, as we have seen yesterday. There were no big dramas on the claims either. Personally, I think we are making too big a thing out of those for as long as we are not going to go above 250, 260 and hold those claims above there and move closer to the 300K. We are not going to get too much of a message out of those. That's just my personal view, of course. So they came out at 230 yesterday. The home sales, pending home sales weren't great either. It did not have too much of an impact straight away, but we can see on those housing data they are slowing down a bit. Okay, so we do have to pay attention to those in addition to, of course, what's happening on the jobs and the consumer front. Bostic, we heard already from him. The balance sheet it was a bit surprised. We had a bit of a surprising move higher last time, but now it corrected that and a bit more. So QT still zooming in the background, and then going over to what's happened today. And what did we see? We saw the Tokyo CPI ticking up actually. So that's something that Suzuki didn't want to see, but it is something that Ueda told us that was possible, okay? The core of core, which is not taken up here, the one that the Bank of Japan really is looking at, it came in at, hold on a minute, let me find it. I think it was like 2.8 or so? Somebody will correct me, but I think it came in a bit higher as well, around the 2.8 mark or so. So that all goes still in the direction of Bank of Japan continuing to normalize. We did have, and that's a bit of a move. We did have a bit of a higher unemployment rate. The jobs market is somewhat loosening for the first time. And we also saw it on the job openings, which ticked up, but this is still quite tight, okay? This is still very tight, but we will have to monitor if this is starting to be a bit of a trend developing. If we see several months of this unemployment rate ticking up with the jobs to applicants ratios ticking up, that means that the job market is starting to loosen, which is one of the things that the Bank of Japan is of course having a close look at, because it may weigh a little bit on perhaps wages in the future, but that's music for later. Then we had well, still a positive industrial production number over there, but the forecast isn't really great, and it isn't really great in the sense as well that the expectation, and we heard from a government official concerning those forecasts, is that especially for September, they see a slowdown in the production of semiconductors and electric components, and being such a big market, that is something that we will need to keep an eye on. But as we see traditionally, data in Japan don't have immediate impacts. They tend to impact only when we hear from really officials, or we know what the Bank of Japan is doing and what the Bank of Japan is making from all of this. All right, moving on. We had another set of, and did I miss the Kiwi here? Very good building numbers, but there was another data. Yeah, the consumer, the ANZ or ANZ, I don't know how you want to pronounce it. I'm going to say ANZ. The ANZ consumer confidence came in at a whopping 92.2 from 87.9 prior. So that's really great. We already spoke a lot about that, and I'm talking about that on virtually every consumer data in the US as well. There is this communicating vases thing going on, you know, when interest rates come off, when inflation comes off a little bit, the consumer tends to be a bit happier, and we are seeing that again also in those Kiwi data. Right. Moving on, and we are moving on to what happened this morning. First of all, we had import prices in Germany, month-on-month negative in Germany, virtually. Okay, the import price index year on year was that higher than the prior one, but well below expectations. That is a tradition for Germany. French CPI, call it in line. We had 0.1 here uptick in August, 0.1 in the headline as well. Prices did go up on a lot of stuff in France over the Olympics, right? So I'm going to do like officials tend to do with numbers when they don't like them or when they want to ignore them. I'm going to brush them under the carpet. We've had the COF leading indicator doing a bit better. Those are July numbers, all right? We are going to have to wait for the August data to see if SNB has been active in some way or in some form or shape on this stronger Swiss franc in the month of August. So disregard those reserves coming off is a bit logic. It is a situation of revaluations. They reval versus the Swiss franc, of course, and if your Swiss franc strengthens, that is automatically, mathematically putting your reserves a little bit lower. We then had unemployment rate in Germany as expected. The Norges Bank is keeping their currency purchases the same in September. That is now a good few months that they don't change the number. So you have to know that every day there's about 400 million Norwegian kroner coming in the market, FX against it being bought. It's not a big amount. The market can easily absorb that, but it's just the effect when if anything negative would come out on Norwegian kroner, those things tend to weigh a bit more. Mortgage approvals in the UK a bit higher. Lending numbers slightly higher as well. Didn't really move or shake the tree. And then over to the pan-European CPI, Italian a tick lower, and we, as expected, those numbers came out lower than the prior. So we are still in a territory that is supportive for more rate cuts. To note, though, is that overall the employment in Europe is holding up pretty well. Okay, we did see weaker data somewhere. We did still see a very anemic growth, if not zero growth, in the eurozone. Yet unemployment is not really showing too much of it. All right. Then what's next for today? So obviously we will have, and you have to keep your clock very close to hand. We will have hourly fixings that are going on right now, as well in the European morning. And then we will have obviously the big 4 p.m. London fixing. I'm saying big. The models are getting messier and messier. We see anything and it's contrary. I also think that the signals should not be overly big, but of course, being the last day of the month ahead of a long weekend, and we have a bit of fun with the US PCE coming in the meantime as well. We could see a bit of a volatile end to the week, obviously, and which is something that is not okay. We will have the Michigan as well for August. I think this is the final reading. But in the mix of it all, we will have the MSCI reweighting going on. You know that MSCI, they have a quarterly review of their index, their stock index. And this quarterly review, this quarterly rebalancing is going on today. So according to the numbers, there may be a little bit of sterling selling going on, a bit of Swedish krona buying going on. For instance, the rest is going to be extremely or quite mild, but just know that that will be going on in the mix of all that month, and so we may have a few distorted moves in the currencies come 4 p.m. or perhaps even after 4 p.m. London time, when that MSCI reweighting is be done. We don't really know when the FX is done. It could have been those two blips that we saw in the euro sterling higher over the course of the week, a bit out of nowhere, that the FX is already done. We don't know anything about it, but just know that that is going, this reweighting is going on as well. And I can, let me see if I find it back, because I've posted not the numbers, but not the amounts, but I've posted the some of the details of the rebels in the chat room yesterday. And if you go onto the MSCI page, you will find, I've posted it in our chat here, you will find a bit more details on everything that goes on onto this MSCI index, in case you didn't know about it yet. Okay, guys, we're going to move over to the prices. And if you want me to look at anything specific, just give me a shout in our chat box, okay? Right. Euro dollar, and let's go over let me see where we are here. Are we anywhere? Is that the weekly? The weekly? Yeah, okay. So we've got our weekly simple moving average in the euro dollar at 110.60. All right, we're 20 pips away. Take that really at the end of this week, or even at the start of the week, to see where we open, because we are month end, as you know, so a lot can happen. We could dip below if there's euro to sell, and then bounce straight back up. Look where we are at the close of the week, rather, when all the flows are done, or even at the opening of next week. But we are very, very close to the euro dollar 200 weekly moving average. All right, so this is one that you can have a look at. For the rest, I think it's okay. We came down on those CPI readings, and as you know, I'm not a big fan of euro. If we would see okay US data, and we would see euro dollar buying, because there's dollar selling everywhere in the month end, I'm going to start to look perhaps to counter a bit of a tick up here towards the end of the week, or towards 4 p.m. if that would be the side. It could be that the other side is really there as well. I really don't know, because as I said, the models have been a bit mixed up on the close of this week. But then we'll have to look at what's happening around that 110.60, 110 and a quarter, okay, if it would be the other way around. I'd say if I look at everything globally, take away like surprising data, just look at central banks. I think the ECB and the Fed could be on exactly the same rate path from here. So then we have to look back, okay, at what the data are telling us. And if you look at the data, I still think that data are not very supportive to what's happening in Euroland. Cable. Cable rejected well, I mean, we didn't even reach there, but what we did reach is the prior high again in 2023, the 131.45. That is now your end of the week support, I would say. I'm not overly sure what's going to happen on sterling for the month, and I was rather thinking that we may see a bit of sterling buying, but that MSCI could like negate that move. Perhaps I really don't know, but uh, based purely on month-end models, I wouldn't be surprised to see a bit of cable buying towards or sterling buying towards the end of the week, and then we see where we end up. And if we end up like anywhere above 132.30 here, I think it may be quite constructive. And then next week we may start to push through. Globally speaking, and it also looks that way. If you look at euro sterling, we are still hanging towards those lows, hanging in the support zone as well. And globally speaking, looking at those moves and the potential Bank of England keeping rates still. For the time being, I haven't changed my view. Globally speaking, the sterling is still one of the better currencies out there, okay? It is tempted to buy it here because it held like okay, this first test just below 84, the figure held. Then we had a bit of two deeper moves down to 80.85. Then we had another look below 84, and we bounced straight away. It could all be month end. We could print a low and then start to bounce again. If you want to pick it up, I mean, the levels are there. They're pretty clear. For those who don't believe in sterling or who believe in the euro, for instance, it is a low risk trade. But know that your risk is not only the price today, but it's also the clock. Okay, so as I always say, I'm trading with the clock very close to hand in over month ends. Anything that happens into 4 p.m. London time could be just fixing, and we could bounce again, or if the other side we could rally and then come back down, and then. But it would be a shame if you pick it up here and then all of a sudden get stopped out on a move down here over the fixing, and then it starts to fly again. So keep your amounts in check. Be careful with what you do. But the level is here, and the level was here too in the past. It is a traffic zone, okay? But for me, based on fundamentals, there is very little reason for me, at least, to start flying again. If I see any move higher up into the 84.5s, unless something changes for the pound, I may want to add again to my very reduced position that I have now short. Okay. Right. Dollar yen is a bit of a lottery. Saying if I look at equity divergence, yeah, there should be yen bias for the month end, but we've seen the other side model, one of the models as well, saying that it's already been done and that there may be some yen to be sold. I wouldn't know. Technically, if you get back above, well, not too far from here, 145.25, and I already highlighted this zone in the 140, in the low 145s. Yeah, you get back above here, we could move higher a bit, but it's, as I said, a pure lottery. I'm going to wait for Monday to know what's going to happen on the yen. That for the technical side of things. If if I look at the fundamental side of things, there is also not too much reason to sell yen for now because of this higher CPI again in Japan. But then if you look at other data, I'm still reluctant. And if you look at, for instance, what's happening on the JGB side, this is a 10-year Japanese JGB side. It's not trading that CPI right now, and so that is holding me back from really buying yen. So whatever you want to do, perhaps the technical side is best if you want to trade anything. That's about all I can say right now. And the yen crosses are telling us about the same. They're very much up and down and in the middle. One though that keeps on coming back here, and that's in line with what the sterling has been doing lately, is the sterling yen. It keeps on coming back, testing that 192, where the 200 DMA is, yeah, 192.10. And look, we already had, and it's a daily. We already had 1, 2, 3, 4, 5 days that where we attempted to break back above, and it did not break above. So one, it tells us that there is activity over there, that people are either wanting to go still long yen versus other currencies, or at least want to take their profit up here. But for us, the longer we knock on the door, the higher is the chance that the door opens at one stage. Okay, I'd say end of chat, not end of chat, but if we get back below 189.5, then it's probably that this level has been too strong, or that something is telling us that the yen is still strong enough to gain versus everything, or that something changes, of course, in the sterling. But for the time being, I don't see too much changing in the sterling. I think it will have to come from the yen side. Quick look at the mix, and yesterday we came very, very close to 20, the big figure again on the dollar mix. Where is it now? We completely shied away from it again. And the market is now starting to be completely divided, okay? I'm seeing people, and we've been warning about those political decisions in Mexico. But yesterday we came back here, and some people now I'm hearing and seeing some people say like, well, we may have corrected enough. There may be enough risk in that right here and now, and some people are now starting to think that it could be enough here, and the negativity would be in here. And obviously, if you start to think about the future of the US political scene, I do think even if Harris said something about migration, I do think that the Democrat leader will be mildly better for Mexico as a country. But in the meantime, we can't obviously ignore the data as well in Mexico. But just know, and I think it's interesting enough because a lot of people were very negative on the Mexican peso, rightfully so. But now I'm starting to hear voices that we may start to come into levels where it's enough. And then you look at what we did on the euro mix. This is the big move lower. You can call it the carry move, okay? Or I mean, no, this I think to me is actually correcting the COVID panic move, and then from where the carry trade in various currencies really started, somewhere back in 2021, we hit the 61.8. We tried it again to come very close, even this morning, yesterday afternoon, but 22.15 Euromex. And then thinking back at the euro, okay, for those who think that the euro may not have too much strength, this is an interesting level. And I would say keep a very close eye on at the start of September, what we do if we get a retest and we get again a failure. Okay, I think this level now is starting to be very interesting because it's also a much more tradable FIB, I would say, compared to a panic move, compared to the one we saw here. Because probably if you look at different charts, you may have different highs here. This one, though, is much more measurable. Yeah, Marcus, dollar stocky, let's do it. Let's do it. And then I'm going back on, and then I'm going to go back. Do I not have one where I have charts on? Whoa, what happened here? I was pretty sure I had a dollar stocky with charts with lines on. Oh, then I have to do it by myself. It's okay. Let's quickly do it together then. Okay, this is probably your biggest here. Do this one and put another one here. Oh, interesting level, interesting little level here, right? 10.15. Okay, we're trading a little bit above, but look where we stopped in March and where we stopped a little earlier. Well, actually, on Tuesday. Okay, we've broken through the level, but it didn't hold for very long. Now, something interesting perhaps for today is that it is possible that there is a little bit of Swedish krona to buy. So if you, I don't know whether you want to go long or whether you want to find levels to go short again on this one, Marcus. If you can be a bit specific on what you're planning to do. But just know that perhaps, and I'm not saying it's going to happen, don't shoot the messenger if it doesn't happen. Perhaps today there is going to be a bit of Swedish krona to be bought. Would it be for month end or for this MSCI reweighting? So if you are planning to do, okay, if you're planning to have a position in the dollar stocky, just know it may have a little bit of a move lower come this afternoon. Okay, so thank you, Marcus. You're trying to get long of it. So if you're long of it, just keep those levels in mind for one, but also keep a very close eye on the clock. That's all I can say for this afternoon. And you know what? I'm not averse to that position, Marcus. Maybe if we see that decent drop in dollar mix on the in the afternoon, I may actually join you, my friend, because it looks pretty okay to me. That level right now, at least for a tryout. All right. And I know Derish is online, and I know a lot of people are looking at this gold again, capped in that 25-30 zone once more. Geopolitics are still at play. The rates, although now yields are ticking up just slightly, are still at play as well. And it's not always been and the models are not modeling it, but just know that metals also have month-end flows, and I've seen this several months in a row now that gold sees month-end flows. And if we assume that some of those models are right or so, I wouldn't be surprised if in the afternoon we actually have a look above those levels. But if that happens, I will consider it as a month-end flow and not a break of the prior highs. Okay, so here this is one that we are going to have to look. Whatever happens into 4 p.m. is going to be month-end and is probably not driven by fundamentals unless we get very bad PCE data. All right, and then have a look at and if it would go to the top side and it holds, have a look at this next level here at 25.5. I think that's going to be the gateway to a move higher. obviously the market will say like, oh yeah, we had like 1, 2, 3, 4 attempts to break 25.30. But to me still, because this is a bit of an extension, we still will have to keep a close eye on 25.5. Okay, if 25.5 goes though, I don't have much before 26.5. Okay, I still think it's the direction globally, but let's month end go by, and then we see what we do with it come next week, and look at data. Okay, data and how they impact the yields, because yields will impact as well those metals. I don't have a lot to say about silver. It's hanging around 20, 29.5. Get a bit of end of month activity. We may see a move back up to 30, but again, it seems like we are stabilizing a little bit here. Never exclude a half a buck or even a buck move on a month end if there is stuff to do, because liquidity in silver tends not to be great at the end of the month and on a Friday. Okay, yeah, Swissy. So I've already said like that we saw this move, sorry, into month end on the Swiss. I am again not excluding that we see some more moves. Of course, if the US data are much better, yada yada, we may start to go back up. But I'm not excluding a bit more of okay, Angela. Oh, that's on gold, right? Okay. Okay, I'm not excluding a little bit more here, but the lows that we put in here could be interesting. And also coming back to what Jordan said yesterday, I think that since they keep the door open to intervention, I think we are not too far away from them just trying to smooth those moves, because we have been very, very heavy on. Thank you, Angela. We have been very heavy in the past 2 weeks, yeah. But the Euro Swiss has held this 93.5 zone pretty well, the 61.8. So if we would see some more activity the same direction, I think we should be a little bit careful. For those who, again, want to play it in euro, keep the dollar away. Euro Swiss is one. Sterling Swiss may be another one, although I haven't really looked at the shorter term yet. But look, we are, and obviously because the sterling is better, we are holding relatively decent levels. Get a move closer to 110.90, 111.10 this afternoon. If we get one, that's going to get me tempted though. Okay, so this is one that I am going to keep an eye on for this afternoon and fine tune a bit of those levels. But roughly speaking, this here looks pretty cool. That is it for me, folks, for today. We all know where the levels are in S&P, 56.5, then the 56, 70.75 on the upside, 55.90 on the downside, 55.70, 55.5. Those are all small levels. We do have this MSCI reweighting going on, so there may be some individual stocks who pull things around a little bit, end of month as well, into a long weekend in the US as well. So don't be too surprised if we see a bit of activity, but globally speaking, this is holding still extremely well. And on that note, I'm going to thank you all for being with us again this week, this month, and I will see you all next month. We do have a floor show next Monday with the US and Canada closed. I don't know about F.A.C.E, though. The people on F.A.C.E will announce that a bit later today. Have a great weekend, everybody. Thanks again, and we talk to each other next week. Be cool.